Vidyashankar Krishnan, who's the Managing Director. Thanks for joining in on ET Now. To start off with, the demand that you're witnessing in FY18, tell us how that's been. What exactly is the order book and the on-ground situation?
We have seen good traction and growth in the US heavy truck market. Last couple of years have been pretty bad over there, and the market is poised for at least 15 to 25% growth, which is really good news for the export to that market. Indian CV space is showing mixed signals, with BS4 giving a lot of confusion, and I think the OEs are yet to make up their minds in terms of the biggies like Tata Motors and AL, in terms of what volumes they will be achieving over the next couple of months. Overall situation, I think, remains extremely positive on the in the Indian market too, and I would say at least hold previous year's levels, but this is a very defensive position. We would expect the truck market to grow this year significantly in India too.
Okay, your stock has been really buzzing. It's moved up about nearly 30% from a year-to-date perspective. We saw yesterday CV sales for the month of March extend out a growth of about 10% year-on-year. Now, I know there could have been some pre-bookings on account of the change of norms and, the technicalities. I won't get into that. But do you also believe that we are seeing a slow but sure uptick in the CV cycle in the kind of demand that's filtering into your business?
Yes. Europe also on the CV side looks stable, pretty stable. And overall between India, Europe has been stable over the last few years. Overall, I would say between India, North America, and also South America, we have seen the worst, and the next 18 months promises a lot in terms of the CV sector. Also, Forgings is focusing on the pass car market globally, and we see a lot of movement over there, a lot of inquiries, a lot of new orders coming in across these three markets, India, Europe, and the Americas.
Current capacity utilization, what targets are you foreseeing in the next 2 to 3 quarters, and do you think that higher utilization will help improve your margins as well?
Certainly yes, high utilization will improve margins. Right now we stand at about 60% utilization levels, which is pretty much on the lower side. We would expect this to jump up anywhere between 15 to 25% in the months to come, and that should maybe average out at around 20% or so for the coming year. That will certainly add a lot of fillip to the organization. We have also put up our large press, and that is coming into production in this year, which will also help in better capacity utilization as well as sales and margins.
Okay. But how would you see your revenue pie being divided? Because right now a lot of it comes from the CV side, and passenger vehicle growth has been commendable. Do you see some rebalancing there? So from, let's say, a 2-year or 3-year perspective, if I were to ask you to give us an outlook for FY19, FY20, what would your sales mix look like?
Okay, right now as we stand, the CV is about 60 odd percent, and about 10% goes to the passenger car market. Over the next few years, certainly pass car is set to grow, and I wouldn't be surprised if we hit close to 20-25% mark in the pass car segment. There is a lot of promise on the pass car side.
Okay, and leave us with some sort of guidance for your sales and your profit in the next 2 to 3 quarters. What can we expect from Forgings?
We would expect an increase in sales in the region of 10 to 15%, and margins and profit should follow accordingly. I mean, margin expansion I do not know, but certainly as far as bottom line is concerned, there should be an increase commensurate with the increase in, at least commensurate with the increase in sales, if not a little bit more.
Okay. So thanks
Overall, I think the environment looks pretty positive, most of the bad news is behind us, and we expect to go forward into 2018, FY18 and 19 with much better enthusiasm than the last couple of years.
Oh, absolutely, and that's showing up in your stock. So, yeah, we wish you all the best.
Thank you.
And thanks very much for joining us with those details about your business.